Okay, so let's just dive right into it. What we all just saw was the single biggest liquidation event in the entire history of crypto. I mean, it was an absolute bloodbath, a collapse that just sent shockwaves through everything. But the real question is, what actually happened? Was it really just one bad headline, or was there something much, much deeper going on?
And you know, carnage might be putting it lightly. We are talking about thousands of traders, many who've been in this space for years, going from millions of dollars in their accounts to literally zero. And in some cases, this happened in just a couple of hours. The speed of it, the sheer scale of the wipeout, it was something we've just never seen before.
And just to put a number on it, for some of the alternative cryptocurrencies, we're talking about a drop of over 90%. 90! This wasn't a correction, this wasn't just a dip. For a lot of people, this was a complete and total wipeout. So that really begs the question, why was this time so incredibly destructive?
So in this explainer, we're going to break down the whole thing. First up, we'll look at what everyone thinks caused the carnage. Then we'll dissect the 5 factors that really created this perfect storm. After that, we're going to explore this idea that this might feel more like a market bottom than a top. We'll even look at a 5-factor framework that suggests this bull cycle hasn't really even gotten started yet. And finally, we'll look ahead at the potential catalysts for what could be coming next.
Okay, so the easy explanation, the one you probably saw all over the place, blames a single headline. The narrative goes that former President Trump made some posts about reigniting the US-China trade war, and that spooked everybody. Stocks went down, crypto went down, a massive sell-off. Seems pretty simple, right? A classic case of big-picture economic fears spilling over.
But here's the thing, and this is where it gets really interesting. We've had scary trade war headlines pop up plenty of times before, and they never caused anything even close to this kind of damage. So that headline, it was the spark, for sure, but it landed on a market that was already just drenched in gasoline. There were much bigger, much more fragile things happening under the surface that turned a small fire into an absolute inferno.
And that's what this was. I mean, this is the textbook definition of a perfect storm. It wasn't one thing. It was a whole bunch of different amplifiers all stacking on top of each other at the exact same time, creating this catastrophic cascade.
All right, here are the 5 big ones. First, the market itself was already fragile. The government was issuing more treasury bills, which was kind of quietly sucking money, or liquidity, out of the whole financial system. That means less cash for markets like crypto. Second, leverage was at an all-time record high, just insane amounts of borrowed money. Third, you had this powerful psychology of the 4-year cycle. Tons of traders were just waiting for any sign of weakness to sell because they thought a top was right around the corner. Fourth, it all went down on a Friday, which is when options expire, and that naturally makes any market move way bigger. And then finally, the nail in the coffin. As soon as the chaos started, the market makers, the people who provide liquidity, they just packed up and went home, right when they were needed the most.
So what's the one thing that explains how people got totally wiped out? It's this: cross-margin. That perfect storm made prices fall so unbelievably fast that they just blew right past everyone's automated stop losses. And if you were using cross-margin, well, that was game over. It meant that it wasn't just your one position that got liquidated, it was your entire account. Every single thing you held was used as collateral and drained straight down to zero.
Okay, so after a crash like that, a historic one, the first thing everyone says is, well, the bull market is over. It's the obvious conclusion. But what if that's exactly the wrong way to look at it? What if the feeling in the market right now is telling us the complete opposite story?
Just think about the psychology of it all. What does a real market top feel like? It's euphoria, right? Everyone's convinced it's a super cycle, that it's going to go on forever. Selling feels like the dumbest thing you could do. But a market bottom? That's maximum pain. It's hysteria. It's people screaming, crypto is dead. You know, just like they did after FTX collapsed. And the feeling today feels exactly like that bottom, not a euphoric top.
And hey, if the feeling isn't enough for you, just look at the hard data. This chart tracks about 30 different historical indicators that have been really good at signaling a bull market peak in the past. And right now, today, despite all the fear, you want to guess how many of them are flashing sell? 0. Zilch. Not a single one. There's this massive disconnect between how scared everyone feels and what the actual data is saying.
So to really understand why that is, we can use this simple 5-factor framework. It helps us look at the core things that drove past cryptomanias and see how they stack up against what's happening today. And when you compare today to past tops, it's just a night and day difference. Back in 2021, I mean, look at this. Almost every factor was red hot. You had absurd amounts of liquidity, great real rates, a booming business cycle. Today, most of those factors are just neutral, kind of meh.
The only factor that's been extremely bullish is access and flows. And what's that been from? Almost entirely from the new ETFs. This means we haven't seen that crazy retail-driven mania yet. It's just been a market driven by big institutional flows, which suggests the real cycle hasn't even kicked off.
So if that wasn't the top, then what could actually push the market into its next big phase? Well, it turns out there are a number of really powerful catalysts sitting there right on the horizon.
Yeah, and we're talking about some serious potential rocket fuel here. You've got multiple Fed rate cuts expected, which would pump more money into the system. There are these potentially huge changes to something called the SLR, a key banking rule that could basically fix the poor plumbing in the global financial system. Add on top of that clearer regulations, continued ETF money coming in, and new ETFs for other coins, and you have a recipe for huge new waves of capital to potentially enter this space.
And all of this brings us to what might be the most important takeaway from this whole thing. As painful as that crash was, it was also a massive reset button. It flushed out all the unhealthy, over-the-top, speculative leverage that was weighing the market down. The whole system has been cleaned out, creating a much stronger foundation for whatever comes next.
So, all of this leaves us with one final and I think pretty provocative question. The trigger-happy sellers, the traders with way too much leverage, the weak hands, they've all just been washed out in this historic event. So after a flush out of this magnitude, who's actually left to sell?